The 7 dilemmas of a stock market investor. I wanted to discuss these 7 dilemmas that you will face when you are investing in the stock market. And if you are not facing these dilemmas, then probably you don't know what you're doing. So have a look at these 7 points and see whether you have faced these dilemmas when you are investing in stocks. Number 1, overvalued growth stock. So you find a company and you find out that it's a growth stock. Maybe the revenue has gone up 10 times in the past 10 years. But the problem is you want to invest, but the company is overvalued. The company is selling for, let's say, 100 times earnings, or it's selling for 75 times earnings. What do you do? So that's a dilemma. You have found a great company which is debt free, which has grown revenue 10 times in the past 10 years. It has got good free cash flows. It has started acquiring other companies with that excess cash. It is growing profits very fast. It is growing cash flows very fast. Everything is great about the company. The management is also great. But the problem is valuations. The company is overvalued. What do you do? That's a dilemma that you are going to face in the stock market and can't do anything about it. Everybody faces this dilemma. Probably you will have to wait till the stock price comes down to a level where you are comfortable investing in that company. Number 2, fairly valued dividend stock. So you find a company which is a dividend paying company. It is not a great business, but it's a good business. It has got very high return on equity, maybe 100% return on equity. But whatever excess cash it is generating, it is giving it away in the form of dividend to its shareholders, because the company doesn't know what to do with that excess cash. The company doesn't see any growth opportunities in the future. So what they are doing is they are giving away dividends. Now, this company is less likely to be overvalued in the market because it is not a growth company. All investors want to invest in growth companies. So these companies get neglected. But the problem is it's a fairly valued company. It is not a bargain stock. See, this is a company which is neither a cheap stock nor an expensive stock. It is somewhere in the middle. It is a fairly valued stock. So that's a dilemma. Do you invest in a company which is fairly valued? Because you are taking a risk here. You will get the same kind of yield if you put that money in a fixed deposit, right? So for example, you are getting 5% yield on dividend yield from this company, and you are taking risk to earn that 5% because at the end of the day, it's an equity asset class. You can put that same money in a fixed deposit to earn some 3 to 5% return without taking that much risk. So that is a dilemma that you are going to face. Number 3, excess cash. Now this is a big problem. Even Warren Buffett is facing this dilemma. What do you do when you have got excess cash? Let's say you receive some income tax refund or you get some bonus from your company. What do you do with that excess cash? Do you immediately put it in the stock market? What if the time to invest in the stock market is not right? What if companies are overvalued? Just because you have excess cash doesn't mean that you have to invest in the stock market. You have to look at valuations. It is not enough to find a good business or a great business. You also need to look at what price you are paying to buy this company. Number 4, gold versus stocks. Frequently you will find that when stocks are overvalued, gold is undervalued. Gold price is not doing much in the past 2-3 years because stocks have been overvalued. So what do you do in this case? Do you pull out money from stocks? Do you book profits and put it into gold? Knowing the fact that the gold market is a manipulated market, knowing the fact that the gold price may not go up as much as stock prices go up, because a stock can go up 10 times in 10 years. What are the chances that gold will go up 10 times in the next 10 years? Something drastic has to happen on a global level for that to happen. So there is this dilemma. Should you invest in gold or should you invest in stocks? Because when stocks are expensive, gold looks cheap, right? Number 5, bargain stocks. You will find companies that are extremely cheap. You will find companies which have 1,000 crore on their balance sheet, but the entire market value of the company is only 500 crore. it is selling for less than 50% of its liquidation value or less than 50% of its cash, and it's a profitable company and it's a debt-free company. If you find a company like that, then you really have to ask, what is the problem with this company? What has gone wrong because of which the company is so cheap? You have to find out that reason. This is a bargain stock. What if you invest and this market cap falls from 500 crore to 100 crore, eroding 80% of your capital? Then what are you going to do? So you have to be very careful with bargain stocks. Number 6, another dilemma you will face is selling a great business. Let's say you invest in a company which is a growth stock. You made money in this stock past 2-3 years. The stock has been going up, and you still know that it's a great company. What do you do then? Do you sell? Do you book profits and transfer that money to some other growth stock which is cheap right now? Or do you continue the ride for the next 7-10 years, for which you will need a lot of patience? So that is another dilemma that you are going to face, whether to keep or whether to sell a great business which is already a part of your portfolio. Number 7, selling a good business that is losing market value. So there is a difference between a good business and a great business. A great business can invest excess cash at the same rate of return with which it is growing. Whereas a good business does not have growth opportunities, but it has got very high rate of return on equity. It generates a lot of cash, but gives it out as dividends. So you have a good business in your portfolio, but it is losing market value because the company is not growing. The company is producing cash, but it is not growing. Something like a See's Candies, which Warren Buffett bought. It's not a growth company, but it's like a cash cow. So what do you do with that company? Do you sell that good business and forego the cash income, or do you keep that good business hoping that someday it will start growing? So those are the 7 dilemmas that you are going to face as a stock market investor. And if you are not facing these dilemmas right now, it means that probably you don't know what you are doing. Okay, so have a look at these 7 dilemmas again. Study what I have discussed in this video. Thank you so much.